Welcome to the Runway, where we cover current events in crypto, Web3, and tech. Let's take off. First up, did strong Bitcoin ETF demand kill Halving's potential bullish rally? The much stronger than expected inflows into the spot Bitcoin exchange traded funds have already caused concerns about a supply shock in the Bitcoin market, potentially taking away some of the impacts of the halving. Bitcoin's upcoming halving might not have as much of an impact on the price of Bitcoin as seen in previous cycles, experts predict. This is because the spot Bitcoin exchange traded funds have already pushed Bitcoin to new highs as pressure on supply strengthened. Nevertheless, the long-term effects on both the price of Bitcoin and subsequently flows into the ETFs will be positive. I think the last sentence and sentiment here really sums it up. I think people will overestimate the halving's impact in the short run, but they're going to underestimate it in the long run, again, because it's this whole idea of reducing supply that's available on a daily basis to the market. So I think this will compound itself. You've got the bullish catalyst of more ETFs and more institutions coming on board to be able to acquire Bitcoin for their clients and for themselves, and I think that's going to ramp up as time goes on. We're actually even seeing the very beginnings of that with UBS and ETFs and different institutions slowly starting to get access into approved Bitcoin acquisition for their clients. Next up, New York jury finds Kwon Terraform Labs liable for fraud in SEC case. A rare win for the SEC here. The SEC accused Kwon and his company of misleading investors about the stability of their so-called algorithmic stablecoin, Terra USD. I'm not sure where Kwon is. I'm pretty sure he's still in Montenegro. He's not even in New York to answer to these charges. But yeah, I think this was one of the few slam dunk cases for the SEC. The jury delivered the verdict on Friday, just 2 hours after lawyers for both the SEC and the defendants gave their closing arguments at the end of the 9-day trial in New York. Jurors agreed with the SEC that Kwon and under his direction Terraform Labs deceived everyday investors about the nature of the supposed algorithm that kept USD pegged to the US dollar. Though Kwon insinuated that it could automatically self-heal in the event of a depeg, it actually relied on continuous trading activity, including large-scale trading done by institutional investors. We are pleased with today's jury verdict, holding Terraform Labs and Kwon liable for a massive crypto fraud, Gerbier Grewal, SEC Division of Enforcement Director, wrote in a statement. The defendants caused devastating losses for investors and wiped out tens of billions of market value nearly overnight. For all of crypto's promises, the lack of registration and compliance have very real consequences for real people. As the hard work of our team shows, we will continue to use the tools at our disposal to protect the investing public, but it is high time for the crypto markets to come into compliance. BS here from the SEC, throwing all these statements out about compliance is just a bunch of nonsense when they've just continued to abuse their power and go beyond their mandate. And there has been next to no clarity here. Obviously, Kwon is a bad actor and he got in over his head here and a lot of people lost money. But as a token of the same coin, people also need to be personally responsible. I remember when people were coming to me to ask about Terra and we were looking at the yields and it was paying 20% APY. Something without any risk at all does not pay those kinds of returns, right? You're being compensated for your risk. And this was always a algorithmic stablecoin, and most algorithmic stablecoins have failed, right? So I think we should be careful here before we condemn people for deploying code. And Kwon fleeing around doing all this stuff, obviously there's some guilt there and he should probably do some prison time, but as a token of the same coin, people also need to be personally responsible for their actions, and the big daddy government, Mr. Grewal here, is not going to be able to save you from your own incompetence. Again, throughout human history, a fool and their money have soon been parted, and that is never going to change no matter how many government regulatory agencies come in to try to protect everybody from everything. Let's move along here. Crypto has too many tokens and mergers are coming. M&As could give birth to tokens such as Shiba Pepes and Floki Doges, according to one expert. Projects with commoditized technology have high liquidity, but not a very active team could become targets of hostile takeover. Traditional players could also be scooping up Web3 projects that are most innovative. M&A in the meme coin sector could reach a fever pitch, leading to the creation of tokens such as Shiba Pepes and Floki Doges. This is an interesting phenomenon that we've seen mergers and acquisitions and all this stuff, but we haven't seen much of this in the crypto and the Web3 sphere. Recently, we saw it with a couple AI projects merge together to create a new token that was a reflection of all three teams, sort of bringing that market cap and team and abilities together to tackle some innovative deployments. Not really excited about this for meme coins. I really personally don't see the purpose in most of these meme coins. But a market is free and people can do as they please. Let's move on. Morgan Stanley beat UBS first Bitcoin ETF. According to crypto insider Andrew AP Abacus, both Morgan Stanley and UBS are set to add Bitcoin ETFs to their platform next week. So I think this is a big deal here. The launch of spot Bitcoin ETFs in the United States has fueled a rivalry between investment banks over which will be the first wirehouse to add the products. I don't think we've fully even really seen the potential inflows of capital to these Bitcoin ETFs yet. 30% of the market is probably all that's buying and active right now. And there's still about 70% of the market in the United States when it comes to Morgan Stanley and the UBSs that their investment advisors and people involved don't have access to even buy these ETFs yet. Slowly, as these in-house due diligence teams approve the purchase of these ETFs for their companies and banks, we're going to see an even more of a supply shock on the market as more and more capital just passively starts to flow into Bitcoin. Let's move on. Meta's Metaverse Lab has lost $40 billion since Facebook changed its name in 2021. When Facebook changed its name to Meta in September 2021, it became clear that CEO Mark Zuckerberg was fully committed to the pivot from Web2 social media to the metaverse. Now Now, 3 years later, one can take a look at just how financially committed the company has been, as well as what impacted the expansion into virtual and augmented reality VR and AR has had on Meta's bottom line ahead of the first quarter earnings call set for April 24th. Meta posted a reported revenue of $135 billion in 2023, up nearly 16% over 2022. Its fourth quarter revenue of $40 billion set a company record and beat analysts' predictions. This would seem to indicate that the pivot toward the metaverse has panned out well for the company, but there are mixed signals to interpret ahead of the call. Facebook itself, the social media app, is doing really well, while the jury is still out on Meta's Reality Labs, the division responsible for products such as the Quest VR headset line. Shows here that they've posted successive year-over-year operating losses totaling around $40 billion. I really don't think this is a surprise, as this is a whole new industry, a new deployment, and this is a lot of R&D that goes into this stuff, and a lot of times these things can fail. From my personal experience, although the Quest VR headsets are much cheaper than what Apple has deployed with their Vision Pros, the first time I really put on the Vision Pros from Apple, I would say that they're leagues ahead of where Meta's at currently, and that was the first time that I thought, wow, if this was a little bit lighter and if this was a little bit smaller, this is a game changer. I don't think that Meta has really gotten to that point just yet for AR and for VR. Let's move on. Bitcoin mining profitability won't necessarily fall after halving. The increasing Bitcoin network fees could complement miner revenue post-halving thanks to the emergence of ordinals inscriptions and BTC Fi, according to Acheron Trading CEO. In dollar terms, it's not obvious that miners would be worse off after the halving. Quite the opposite. The decrease in mining rewards is going to be compensated for an increase in network fees. So for many who don't know, the Bitcoin inflation rate in the next couple of weeks will be cut in half from 6.25 Bitcoin to 3.125 Bitcoin, being newly created roughly every 10 minutes in each Bitcoin block. And what this means is that miner revenue will be cut in half from the block reward side of things. But miners also make another type of revenue, which has to do with the fees on the network, the activity of people wanting to use the network. And the more people want to be active on the blockchain, the more people want to send transactions or create ordinals or do some kind of BTC Fi, which is another word for DeFi, right? All of these things have to fit into Bitcoin's block. And every block on Bitcoin is really small. Bitcoin is the oldest blockchain. It was deployed in a way to maximize for certain things like decentralization and for security. So it gave up this idea of scalability. So that block space is very finite. And every 10 minutes, there are so many people bidding to get into that block space and to be able to use that block space that the fees that are created from all this activity, it will increase miner revenue and rewards. And we've already sort of seen some of this happen over the past 6 to 12 months, where we've seen increasing demand for that block space and increasing fees be produced as a result of that. And that's expected to increase the more attention Bitcoin gets, the more developers deploy things on Bitcoin, the more people onboard to Bitcoin, the more people use it. That base layer blockchain will see more demand and the fees will increase, and that rewards does go to miners. So I think that's what's being talked about here. Now, I don't know if that's something that just somebody snaps their fingers and that happens overnight, right? These things happen in waves and over time, and this adoption that is coming and incoming, and that's been increasing exponentially almost all over the world, right, is part of that force. So I think it's much less of an immediate thing and much more of a slow build that continues to occur and occur and occur. Let's move along. Google ponders plans for paid AI-assisted search. The Financial Times reports the tech giant may charge for premium features in its first ever paywalled product. Alphabet's Google is considering charging for premium features on its generative AI-powered search engine. The Financial Times reported on Wednesday, citing people familiar with the plan. So it sounds like they are looking to start to charge for something like Perplexity, which is, I would say, their biggest opponent right now, and it's an application that I'm actively using. And the beautiful part about Perplexity is that you can use different AI models. You don't have to use whatever woke propaganda models that Gemini that Google creates or whatever propaganda models that OpenAI uses. You could opt for an open source model. You can use Mistral. You can use all sorts of different models instead of having to be fed propaganda from Google, right? So my guess is that this will be tied in, and it's just another way for them to generate revenue. And I think it's actually probably a mistake for them to charge for this, and they should roll this out for free. They would basically lock everybody in and get people used to using their platform right away, as opposed to some of the competitors, right? But as for myself, I don't use Google, and I don't ever plan to unless things seriously change behind the scenes there. But I am an active user of Perplexity now, and I think it's a very useful tool. Next up, scientists propose AI framework for mass manufacturing of stem cells for regenerative medicine. Some stem cells have a natural ability to divide into more cells and develop various specialized blood, bone, or muscle cells. These pluripotent stem cells offer great promise for new cell treatments in regenerative medicine, researchers say. I think this is the very tip of the iceberg of AI being utilized when it comes to biology, because at the end of the day, biology is simply code. Your genetic code is a makeup that forms genes and cells and all sorts of different things, and that is simply code, right? You've got the different base pairs, the adenosine, guanine, the tyrosine, and adenine, and these base pairs form, and they form different combinations, and this is simply code. Using AI to help create new treatments and new innovations, I think, is inevitable. I remember watching a speech by Jensen Huang, the CEO of NVIDIA, NVIDIA. And I believe he was talking about this, that this is the next golden age of technology that AI and computing is going to sort of unleash, is this biological element of things. All right, guys, let us move on to some X Factor takes. I do have a lot of them queued up for you guys for this long weekend and also from the end of last week. The reason I do this is I think that X is such a powerful platform, and a lot of people don't understand yet what's underway when we sort of have the capturing and the loss of people's trust in mainstream media. And a lot of that media is transitioning over to X. A lot of these genius, innovative people that are experts in their fields, they are posting their thoughts daily directly to X. Great data, great information that you can actively engage with and follow and communicate and talk. And it's all happening on the X platform. I've curated my account and my feed to be listening into these experts in their field. So I've got a lot of these takes, and I think there's just tremendous value in this. I'm just going to continue to offer my commentary on different things and point out my viewpoints. So here we've got Daniel Batten up first. Just in, mining in post-ban China is growing again, is up to 15% of global hash rate, is greener than we thought, just spawned a heat recycling innovation. Even this communist country, many would consider the most authoritarian regime on earth, they banned mining in China, yet hash rate is actually increasing in China, right? So if they can't stop Bitcoin and even Bitcoin mining, they can't stop even Bitcoin mining. This really shows you how censorship resistant and how deep the roots of this network have taken globally all over the world. Next up, Anthony Scaramucci. Custodia Bank shouldn't back down. KC Fed was wrong to arbitrarily and capriciously reject their master account due to dislike of crypto. Judge then did a complete 180 on prior decision, raises major questions about legality of Fed and potential political pressure from Elizabeth Warren acolytes. Godspeed, Caitlin Long. So nice to see Mr. Scaramucci here supporting Caitlin Long in her bid here to get a master account at the Fed. Let's move along. Bitcoin Magazine, 1.5 trillion asset manager Morgan Stanley reportedly racing to offer Bitcoin ETFs to all clients, gradually then suddenly. And this is something that I was talking about earlier and focusing on here is the fact that most of these institutions still have not even greenlit the acquisition and purchase of Bitcoin ETFs for all their clients. We're only at about 20 to 30% of this steady stream of buying pressure and capacity of the market having access. And I think over the next 6 to 12 months, you're going to see just an insane stream up of new capital flowing into these ETFs. And to parry that with this idea of the halving, which I know we kind of talked about briefly, every day there's going to be 450 less Bitcoin available on the market for these institutions and for people in general to acquire. So I think this is just creating massive supply squeeze. I don't think people are fully ready for this just yet. The past 10 to 15 years, retail has actively been the major purchasers of Bitcoin, but I think you're going to see this age of institutional acquisition here, and I think people are going to be very surprised. I don't think people are understanding what's at play here. Let's move along. Caitlin Long status confirmed. There is definitely a witch hunt underway to debank fintech and crypto companies in the US. It's very political, it's illegal, wrong, and may violate the FDIC's 2019 Operation Choke Point lawsuit settlement. Debanking should be an election issue in November, and I could not agree more here with her statement. And I have felt this pressure myself trying to open accounts at different banks, having my long-standing relationship with a credit union. Basically, they tried to end that. They tried to essentially debank me. And luckily, I was able to appeal up to the vice president of the credit union, and they reversed that decision, right? Because I showed them that your mission statement is you're based 80% on relationships. So I presented my relationship and my connections and all my years of good standing, my personal accounts, my multiple business accounts with this credit union. And luckily, they actually reversed that decision. That being said, I'm still nervous and scared to even leave capital. I feel much more comfortable holding my capital in Bitcoin, in Ethereum. I pay, of course, what I need to pay for my taxes and whatever else I need to pay my employees or contractors, expenses, electricity bills, whatever that may be. I will convert and pay those things very quickly, but I am somewhat nervous to even leave a large amount of capital in these entities, right? Who knows what could happen? I thought I had an 8-year great relationship, and all of a sudden there's this political pressure behind the scene coming from the federal government that I'm sending, 6-7 figures of taxes to, and this is the way that I'm being treated behind the scenes. I'm not a fan of it. It's hard to even access capital markets and get loans even on equipment and different things. So we're at a difficult point here for the industry, and it's not a good thing. Post here by Dennis Porter. He kind of goes into this here. Debanking a company without due process and ample time to move to another provider can act as a death sentence. Such an abrupt disconnection undermines a company's fundamental operations, including paying its workforce, settling rent, and covering bills. This practice, known as debanking, unfairly targets certain businesses, particularly those in the Bitcoin and cryptocurrency sectors. Functioning as an indirect prohibition, debanking not only signifies targeted discrimination, but also serves as a covert method for those wielding power to eliminate competition or suppress entities that diverge politically from banking institutions' ideologies. This form of banking bias is a critical issue that we at Satoshi Action Fund are now addressing. We advocate for a decentralization of power in the banking sector within the United States, emphasizing the significant role states can play, leveraging their dual banking authority, a privilege granted 160 years ago. This authority empowers states to charter and oversee their own banks. The capacity to enhance state-level banking currently lies with state banking officials and regulators. Those inclined to challenge federal oversight should consider strategies to welcome industries that find themselves politically marginalized. At Satoshi Act Fund, our mission is to bolster these efforts by supplying strategic insights, intellectual firepower, and spearheading the development of cutting-edge policy models. These initiatives aim to persuade states to embrace Bitcoin and other digital asset companies. Our dedication to devising solutions is unwavering, with promising developments coming soon. This is fantastic by Dennis, and I think a counterbalance to what the federal government is doing here to Web3 and crypto companies and to the future of technology in our nation. Banks also have to comply with state charters and state regulations as opposed to federal regulations, right? So certain states that want to attract capital and bring crypto-friendly and Web3 and Bitcoin businesses to their shores should wield this power to clamp down on this unconstitutional activity by the federal government of putting pressure on Web3 companies simply for existing. With Choke Point 1, they already lost in court, and they already were told this is completely unconstitutional. And now that the same cabinet of swamp creatures is back in power, they are pursuing the same strategies again, even after directly being told this is unconstitutional, because they don't care about the Constitution. They think that they can just do whatever they want. And hopefully this power is checked and this abuse is stopped sooner rather than later. Let's move along. Warren Davidson. Sound money is essential to defending freedom and defeating Marxism. Inflated assets grow the wealth gap. The provocateurs will distract and divide in every way possible to keep the theft going. Excessive spending fuels inflation. More freedom, less government, sound money, right? So if we look here, we look at the wealth of the top 1% in the US and how it's gone up so drastically just in the past couple of years. Well, what came in tandem with that? The massive printing of COVID money that has now flowed into the economy and basically caused massive 5-decade high levels of inflation that we've seen. And the cost of goods and services are still rising, right? That money is still being priced into the market and is still chasing after the same number of goods. The cost of everything is getting repriced by the inflation, right? And what sucks is that the wages are one of the last things to go up in a market, right? Everything else adjusts before wages. Wages are the lagging indicator, and that puts people, especially the poorest people, living paycheck to paycheck in a very serious bind. And this is an extension of the chart. If you go to the website, What the Happened in 1971, you can see the same massive increase from the poorest people to the wealthiest people. And the reason being is that wealthier people own assets. They own stocks, they own equities, they own property, they own commodities. When more money is printed, those assets inflate and the value of those assets goes up. So you have this idea of asset inflation. Let's move along. This is Ram Aluwalia, and he has so many great takes, and a lot of them are contrarian and interesting, so I curated my feed to follow up on his thought processes, because he's oftentimes offers a contrarian take to what everyone else is saying, especially when it comes to crypto and macro things in general. So if you haven't followed him, strongly advise giving him a follow. Goldman on Bitcoin. Goldman Sachs intern created something of value today. Here is a chart showing asset classes side by side in their year-to-date performance. What is the best performer year-to-date? Bitcoin. The fact that Goldman has regular coverage on Bitcoin and CNBC has regular coverage, and BlackRock is in the game means that the castle has already been stormed. Means that digital assets are here to stay. I do agree. Cynthia Lummis. The US government is currently the largest nation-state hodler of Bitcoin. Are we about to forfeit our lead to China? Should the US government hodl? So this is a follow-up on the fact that we could see on-chain that the US government was moving Bitcoin to Coinbase's exchange, likely to just sell off the coins. And here it kind of shows the holdings of different nation-states, and the USA has the advantage here with over 200,000 Bitcoin in custody. And I really don't see any reason they should give up this treasury. They should actually be adding to this treasury instead of selling. That would be the game theoretically smart thing to do, because it costs them next to nothing, especially when they have the right to just print money, which they do. So it just makes zero sense for them to sell off this Bitcoin reserve. Cedar Innovation Foundation. Federal courts, the CFTC, and even Gary Gensler, before becoming SEC chair, have all agreed. ETH is not a security. Let's take a trip down memory lane. In July 2018, written testimony before Congress, Gensler stated the crypto markets have gotten some clarity, with the SEC stating that the two largest coins, Bitcoin and Ether, are not currently securities. While teaching a course at MIT in 2018, Gensler said that the SEC had already determined probably 3/4 of the crypto space not to be a security, and that Bitcoin and Ether make up a large portion of that space. So the level of hypocrisy from this guy is just unfathomable. I don't know how he can show his face in public, being an MIT teacher, being an expert on this stuff, and then go back and just be a complete and utter hypocrite. He has no spine. No, he has no actual beliefs of his own. He's simply bending to the whims of whatever his overlords, especially his handler, Elizabeth Warren, and the Biden administration tell him to do. I would say that Elizabeth Warren is calling the shots on this and even handling Biden on this. This is just pathetic. This is a post from a niche that I'm in, which is crypto mining and GPU mining and different types of cryptocurrency mining. And I thought this was interesting because it also applies to all the stuff with Terra Luna and all these different meme coins and all these different things. Everyone can have an opinion regarding buying this ASIC miner or GPU right now. There are risks involved when buying anything. Only you can decide if you want to take on that risk. Don't blame others when it's you who takes on that decision to use your hard-earned money. In crypto mining specifically, it is a risky endeavor in the first place, so grow some balls and take responsibility. I could not agree more, and this doesn't only just apply to any industry. This applies to everything that you do. in life, right? If you are deploying capital, you are taking a risk, right? You are trying to generate yield, you are trying to do business, and there's risk involved in these things. That's just part of society. It's part of human progress and advancement. Anthony Pompliano. Bitwise did 20,000 meetings and calls with financial advisors last year. That is an insane amount of work on the ground to educate traditional investors on Bitcoin. Today, H. Horsley and Matt Hoogan have $2 billion in the ETF. Full episode on X. So he also has a podcast here with these guys. Some great content coming out of his podcast lately, I think. His interview with Kathy Wood a week or two ago, I thought it was fantastic, and she's always amazing and does a great job explaining her theses. Let's move along. Paul Grewal.eth. We appreciate the Second Circuit confirming today what is clear under the federal securities law. There's no private liability for the secondary trading of digital assets on exchanges like Coinbase. Why? Because contracts matter. You can read the opinion for yourself. Alderati says here, so if I have this straight, there is no Exchange Act liability without a contract that can be rescinded. No contract, no liability. Yes, sir. And someone here says Gary probably having a stroke this weekend. I will post here as well that Oatmeal Raisin, which is Alpaca Blitz, he says that that's not all what the ruling says. The appeal arose from an order on an early motion to dismiss. The only question before the trial court was whether the plaintiff's complaint was sufficiently alleged. The trial court found that it wasn't and dismissed the entire case. An appeal from that order resulted. At issue in the appeal was whether the trial judge erred in the finding the complaint insufficient to state a claim. The Court of Appeal undertook the same analysis as the trial court, de novo review, and found that the district court got it right in part and wrong in part. The case was remanded to the trial court to continue in a manner consistent with the appellate court order. The parties haven't even gotten into the merits or discovery. That starts now. And then someone here says they won't get into the merits or into discovery as to the Exchange Act claims because those claims were dismissed. He responds here and says, on remand, the trial court will grant leave to amend the complaint and correct any pleading defects if possible. Watch and see or don't, and choose to believe whatever you want, whether true or not. What I love about X is that people can have contrarian takes and people can voice their opinion and provide new information directly on a feed, right? So we'll see how this all plays out. When you get into legal matters, these things are very complicated. I think the crux of what is being said here is this idea that without a contract, there's no liability there, right? There has to be a contract. This idea of a security, when the initial securities law was made, it was this whole idea of this orange grove case where people bought these orange groves and they bought the land, and the people who issued the contract would basically tend to the land and farm the oranges, and then they would share the profits of those oranges with the investors. And this was deemed to be a security. And the whole idea behind this, the fact that it was a security, was this fact that there was an actual contract in place, right? So I think that the argument that Coinbase and many in our industry are making here is that absent that contract, these things should not be a security. There's no contract between people who buy Ethereum and the Ethereum Foundation. Nobody signed a contract. There was no agreement that there was going to be profits or anything like that. And what the SEC is doing is basically claiming these things are contracts, right? So just in and of themselves, without a physical actual contract, this idea of the Howey test, right? The Howey was the court case about the oranges. And what we determined is that the oranges themselves are not securities. Oranges in and of themselves are not securities. And in the same way that oranges are not securities, neither are most of these cryptocurrencies. So that's at the crux of what's being decided here and looked at in court. Let's move on here. This is another take from Stuart Alderati, and he goes a little bit deeper on this. He says, Director Grewal says the crypto enforcement units act with integrity, but ignores the debt box sanctions for gross abuse of power, the Ripple judge's admonishment for lack of faithful allegiances to the law, and the arbitrary and capricious finding in the Grayscale case. So he's actually spitting back here a little bit at the first story of the day that we read about the Terra Luna and Do Kwon, and he's kind of saying like, look at all these gross abuses of power and look at all the losses you've been taking in court, including the sanctions, especially in the debt box case for basically perjury. So on the substance, he cites one portion of the Ripple ruling, but ignores that the SEC lost or gave up on most of its claims in the case, including the court's rejection of the SEC's assertion that XRP was in and of itself a security. He says the SEC has given clear crypto guidance, but that guidance, which is still on its website today, adds and subtracts factors to the Howey test at whim, leading to what the agency's former general counsel said was greater confusion. If this agency wants to honestly repair the institutional damage inflicted both to itself and the industry over the last many years in this misguided war on crypto, it needs to get off its soapbox and own up to these truths. Not to mention all this hypocrisy. All this is doing is just wasting US taxpayer money. It's wasting investors' money. It's wasting money that could be going into more jobs and creating more opportunities for Americans here. It's disgusting. It needs to end. Here's a post from Jameson Lopp, and I love this little infographic here. Don't acquire Bitcoin. It's going to crash. And here it shows the US dollar on its constant descent of purchasing power with inflation, right? Because money is constantly being printed. And here's a guy who's saying, yeah, I got a pay raise. But, meanwhile, inflation has gone up 15 to 20% over the past year. He may have got a 5% raise, but it hasn't kept pace with the purchasing power that he's now lost due to inflation. And this is a one-way street, right? This is something that just continues forever. The Federal Reserve, the goal is 2% inflation per year, right? Their goal is to reduce your purchasing power by 2% every single year. Here's this picture of somebody who's hodling Bitcoin and says, oh no, it crashed. How will I ever financially recover from this? But obviously as the best performing asset in human history. It just shows the massive price movements, these exponential movements of price going up before obviously crashing down to still being 10 times higher than they were maybe a couple years ago, right? Very interesting to see this visualized for people. Marissa Tashman-Koppel, given lots of recent news, it's a good time to give you all the updates on the latest in crypto litigation: SEC versus Coinbase, Custodial Bank versus Federal Reserve, CFTC versus KuCoin, BIBA Collection and Fund DeFi versus SEC, Legilex versus SEC, SEC versus Debtbox, MFA versus SEC, Shapeshift, Genesis. And she kind of just talked about all the cases of the past month and just all the movements that have happened in the space. This is Marissa Tashman, so highly recommend giving her a follow. She is the head of legal for the Blockchain Association, and she did a great job on this thread outlining all of the cases. I'm not going to go through the whole thread, but what I will comment on and say here is that when we see BIBA Collection and Legilex, these are companies that have finally had enough and they're actually suing the SEC. So at the end of the day, look at all these lawsuits, look at all this stuff happening. I mean, this is just such a massive waste of taxpayer resources, taxpayer time, the SEC's time, and these institutions that are creating jobs and creating revenue and tax base for America have to deal with the SEC and all of their bullshit now. And then also CFTC is actually suing KuCoin because they're claiming that stuff like Ethereum is a commodity. So this is actually an interesting case to sort of highlight here, that there's this sort of turf war that's occurring between the SEC and the CFTC. Here's Dennis Porter. He talks here about the state of Louisiana with a unanimous 103-0 vote. It passes a bill to protect your fundamental Bitcoin rights out of the state house. Love to see this. Again, at the end of the day, this is not any special benefits or anything like that. This is simply just saying, hey, you have the right to purchase, to hold Bitcoin, to use Bitcoin, and to mine Bitcoin. I mean, this is simply just a bill of rights for Bitcoiners, right? Which is awesome to see. It's not saying, hey, we want extra protection. It's just saying, hey, we want to be treated like every other industry and like anybody else. Amy Peikoff. It looks like Speaker Johnson will be trying to ram through a FISA Section 702 reauthorization this weekend with very little in the way of reform. The fear-mongering has already begun, apparently. You know, again, both sides of the aisle are guilty, and this is pathetic if this gets pushed through. It is obviously unconstitutional. This law is unconstitutional, and they've abused the FISA when it comes to spying on different presidents or making up lies to abuse this process, and I think the government needs to be held accountable. And although it may make their job more difficult to catch criminals and to do things, that's okay. Part of being an American is trading some element of safety for freedom, to be free. Our Constitution and our Bill of Rights is immutable, and it's what our nation was built on, and that takes precedences over everything else. And I think we've gotten away from that as a country, and I think we need to get back to being America. Simon Dixon Twit. Here he says, what could go wrong? Few understand the risks, yet 11 billion has been restaked. I think he said restated, but he meant restaked, right? So this applies to Eigenlayer, I believe, and restaking on Ethereum, where you are allocating some of your staked Ethereum to provide security for other networks. And again, like anything else, it is a risk. There is a risk involved with these things. So be wary of those risks, right? These are new technologies and these are new things that are occurring. And if you're somebody who's able to stake your Ethereum and then restake it on Eigenlayer 0, you are likely an experienced DeFi user. You're confident navigating MetaMask and these different dApp wallets. You know what the risk is that you're taking on. So if something blows up or something bad happens with that, you've taken on those risks and you've made the decision to do that. I don't think anybody should be crying if something does go wrong. There's also much reward there, right? There's going to be token airdrops. There's going to be all sorts of things. So the wise decision is don't put all your eggs in one basket. If you're going to participate in these things, as I am myself and many other people in the industry, understand the risks, know what you're doing, and don't put all your Ethereum to be restaked on Eigenlayer 0 or these different derivatives and different things that are being tested in real time. Nick Carter. Yes, you cannot positively prove that something is AI. Watermarking is impossible. I'm sorry, it's over. The only way is to attest to everything that is real. And so anything outside the attested set is by definition suspicious. And this is an interesting little tidbit here about how good AI is getting, and it can fool you into thinking that it's the person, even though it's deepfake, right? So how will this be prevented? This concept of AI is like this idea of ultimate abundance, of being able to do so many different things. And then with something like a blockchain is this idea of provable scarcity, provable provenance. So I think if you pair those two things together, which is already being worked on, something where, you sign, if you're putting out a video and it's really you can sign that with a private key, right? To prove, hey, yes, this has been cryptographically signed by me. This is actually me. And there's this interesting parallel between blockchain and AI that can be very useful here, especially for proof of provenance of whether it be an article or a video or any piece of content, that it was you that really said it because you signed it cryptographically with a private key that is based on a cryptographic blockchain that only you control that private key. And I think that's very powerful, and it's going to be essential in the age to come. Next up, El Salvador offers 5,000 free passports to experts. El Salvador's President Nayib Bukele has announced a groundbreaking initiative to offer 5,000 free passports to highly skilled professionals, including scientists, engineers, doctors, artists, and philosophers. This move aims to attract top talent from around the world, granting them full citizenship and voting rights in El Salvador. The initiative is part of a broader strategy to position the country as a hub for innovation and development, leveraging the skills and expertise of the global workforce. The announcement has sparked discussions within the crypto community, with some suggesting that cryptocurrency developers and supporters should take advantage of this opportunity. The value of the passport is estimated to be equivalent to $5 billion in El Salvador's passport program. I think this is amazing. Such a genius idea to bring talent and to attract innovation to your country. The complete opposite of what we're seeing here in America, right? Where the federal government is using tax dollars to fly in illegal aliens all over, throwing them all over the country. They are attacking the tech industry and they're attacking Web3 and crypto. And we're seeing the opposite occur here in El Salvador, where they're actually attracting top talent. Apply, and if you're an expert in industry, we're going to bring these professionals in. And I think this is great for all industries and love to see what's happening in El Salvador. Don't always agree with everything that Nayib Bukele has done. That being said, I think that he is a huge net bonus for El Salvador, and I think that they're going to be one of the crown jewels of South America and Central America. Fantastic work. Next up, Laura Shin. Why the Ethereum community is up in arms against a proposal to change the monetary policy. Ethereum researchers claim that a high staking ratio is bad for the network as well as for ETH as an asset. They're proposing a solution, but is it worth the cost? Interesting proposal on the table here. I'm going to chime in with my one comment, especially about money and monetary policy. I think that the Ethereum likes to say that now that they've gone deflationary, they're super sound money. I don't think there's anything super sound about a monetary policy that is constantly being changed and constantly changes, right? So although the inflation may actually be deflationary temporarily, or that can change based on things, I don't think that that is super sound money. I think that what Bitcoin is super sound money. It is money that has an inflation policy that everybody can know in advance, that nobody has a special advantage or a special secret window into the fact that they're going to print money or do this or change the monetary policy. It is literally enshrined in the code, and that code has been running since Genesis about 10 to 15 years ago. And I think, to me, that is super sound money. Ethereum is amazing, and I'm a big supporter of Ethereum, and I've mined Ethereum. I participate in staking Ethereum. I love the development and all the things that are happening on Ethereum and all of the layer 2s that are being built, but I don't think that Ethereum is super sound money. I think it's something else entirely. Although it can have monetary characteristics and principles, it is not the super sound money that civilization will be built on in the next 10 to 20 years. It will be something that people use, and it can have monetary characteristics, but I think that anytime you have a money that is constantly changing how it's issued and how it's distributed, that is not super sound. But again, these are my opinions. Elon Musk. Traffic on X reaches all-time high. This is a post about organic traffic on X and how it's climbing here, and I love to see it. Gladstein. People skeptical that Bitcoin can still work if all hell breaks loose are apparently completely unaware that it is keeping millions of people afloat right now, where all hell already broke loose in Iran, Venezuela, Gaza, Sudan, and many other places. Great point, great thought process here. Most people I talk to in America and in first world countries have no clue. They don't really understand, what's so great about Bitcoin. Well, this idea of having a permissionless bank account, essentially, which is a wallet in your pocket, where you can, if you memorize 12 words, you could take your money with you anywhere you want in the entire world. I think that is something amazing, and it offers a tool for people all over the world to be able to store their life's energy and their work energy in this beautiful asset that can't ever be debased or abused by dictators, etc. Let's move on. Ryan Selkis. Hester Peirce is a national treasure. I can't imagine how jaded I'd be if we didn't have at least a few people like her in DC. So here's a post from Hester Peirce's speech from yesterday. She knocks the current staff guidance approach, especially SAB 121 and the commission's lack of industry engagement and enforcement first and bad faith approach to rulemaking. This part in advice to founders really jumps out. So hopefully, if we have a change of the guard here in the next election cycle, somebody like Hester Peirce will be the new head of the SEC, and I think she absolutely deserves to be it, and so I will be rooting for her greatly. But let's play a little bit of devil's advocate here, right? Because many of us who are operators and founders and run tech companies and Web3 companies, it sometimes is tough to see from the other person's point of view or from the view of a regulator. But I think that a good faith regulator like Hester Peirce, you can read here what she's written, and she wrote, this was her sort of advice to founders. Sixth, document your interactions with the commission. If you are 2 or 3 years into a process without progress and you have regularly been reaching out and trying to respond to the staff's concerns, the documentation will prove invaluable. Seventh, do not be a stranger and do not give up. Carefully consider what the staff is saying. If you do not see a strong legal justification for stopping your idea, do not give up. Be realistic about the timeline. But if you do not hear back from the commission, keep following up. Innovation is not linear, and the path to launching an innovative idea will not always be straight. Try to see things from the SEC's vantage point and to learn from staff concerns, but push back when those concerns are not legally grounded. Dealing with an agency that will not give you clear, legally sound answers is frustrating. Agencies, however, are not monoliths. Even now, people within the agency may share your frustration and may be making arguments similar to your own in internal SEC conversations. So great insight there from Hester Peirce, and an interesting way for a regulator to interact. And this is how America should be operating. This is how our regulators should be interacting, and how they should be dealing with founders and communicating to founders and dealing with the private sector. So I love this. And it also helps our industry and people that are in the Web3 space see from another point of view when you're dealing with a good faith actor in this regulatory sphere. Next up, Mark Andreessen, if we don't spend the money this year, we won't get the same budget allocation or more next year. So here's Joe Luria posting, middle managers often gain clout in an organization by being big spenders, regardless of whether it helps or hurts firm performance. I couldn't believe it until I saw it. And again, this is not just private sector, but this is also the government itself, right? I've talked to people who work in different departments and who've worked in different agencies, and basically they get this budget for the year. And this is essentially peak fiat, right? Peak fiat money, where it's like, hey, if you don't spend this $50,000 by tomorrow when the new budget is forced, you won't get it. You won't get it anymore. And so what they'll do is they'll just spend that money to waste it. They'll buy coffee machines, they'll buy whatever, essentially waste the taxpayer money. And there's really no accountability there for that at all. There's a complete disconnect between government officials and people that are working in government. The fact that is hard-earned taxpayer money from citizens that are paying that. There's this huge disconnection. Interesting to see that is also happening inside companies too, right? So when these companies, huge tech companies, just grow so much and they have a budget, they will simply waste that budget instead of thinking clearly about it. Here's Tom Lee. In our view, probabilities favor the Fed becoming more confident, or at least 3 cuts markets by June, as there will be 3 inflation reports by June, CPI March, April, and May. This is supportive of equities, hence buying the dip of this recent pullback makes sense. Interesting take from Tom Lee. State lotteries have never been more popular. We have become a society of gamblers. In America, lottery ticket sales are at a record high, and here, of course, the government is increasingly gaining revenue from this type of gambling, while other types of gambling they may frown upon. But as long as they're getting a cut here, it's all good. And again, this is why meme coins have such a attraction to people, right? People want to get rich quick, and there's always going to be different schemes to do that, whether it's scratch-offs, lottery tickets, or meme coins. It's part of human nature in a way, right? And people know what they're doing. They know they're gambling. That's their money and that's their decision, right? So, Big Brother is not going to come save you. No one's going to come save you. Of course, I like to gamble. Everyone likes to gamble. People like to have fun, and that's just part of life, right? So there's risk involved, of course. The U.S. government drew down the Strategic Petroleum Reserve to supply the market when prices were high, but when prices were low, they didn't refill it much, and today they canceled their latest buy orders due to rising prices. Sticking the landing is the hardest part. She's referring to this soft landing of the economy, but here you can see that over the past 4 years, from 2020 until today, we've lost about 50% of our strategic reserves here of oil, and this is concerning if this continues, because what happens is, what the government does is they will release this oil into the markets when oil prices get too high, and they'll try to control the supply and demand of this commodity. They can only do this for so long. What happens when they can't artificially try to keep the price of oil stable? The price of oil will trade at its free market value. And the cost of all these wars and all of these engagements and all the stuff that's happening all over the world will be felt by the American people, and they are desperate to do everything they can so that doesn't happen. The American people don't feel that pressure, that additional pressure. So this is sort of this barrier. The Strategic Oil Petroleum Reserve is the barrier against reality for most of America when it comes to our engagements all over the world. And we've lost about 50% of that over the past couple of years. So extremely concerning at this point in time, the mismanagement of that oil over the past 4 years. As you can see, it's fallen off of a cliff. The creator of Silk Road 2.0 got 13 days in jail and faced only tax evasion fines. Life in prison is insane. And no, he didn't hire anyone to kill anyone. That was completely thrown out of court with no evidence. The hitman lie was just to smear Ross's name to the public. The government knew full well it was a lie, but it worked, as evidenced by people who continue to spout it. Here's a tweet from his supposed target, Curtis Green, talking about this, and he's supposedly a target of a hit by Ross Ulbricht. It seems like this was all a lie and a smear, and none of that ever stuck or stood up in court. So all that was propaganda to, turn public opinion against Russ Ulbricht. And it sucks because, nobody should be sitting in prison for a non-violent crime, for creating a website, basically. Even though the website was legal, whatever, he should not be in prison for life. And I say the same thing about anybody, right? Even the same thing about Sam Bankman-Fried. I said between 20 and 30 years, and I thread the needle perfectly with that call. And I think the same thing here is that, anybody who does not commit a violent crime should never be sentenced to life in prison. Alex Gladstein, no one's currency fortunes should ever rest in the hands of any corrupt government officials ever. Here's Alex Gladstein talking about Zimbabwe. Zimbabwe's currency fortunes now rest in the hands of a new central bank governor who has stepped into the top job almost a month before the initial start date of his appointment, right? So you're dealing with a currency that everybody in the country uses, and this idea that only one person can control that and basically control the outcome of all of the economy and society is ridiculous, right? This is why Bitcoin is so important, because it's this idea that money is this neutral asset, this neutral good that the entire world depends on. I mean, it enshrines all of the fundamentals, the inflation rate, everything in code. So no human can abuse it and cause ruin and cause problems. So human greed always gets in the way, and governments, if they have the power to print money, they always print money. It's the easy solution, right? So Bitcoin represents this return to financial and fiscal integrity and this stop on that abuse, right? Because it's mathematically built into the code that it's impossible. Here is Alex Gladstein. Great image to show the weakness of the fiat banking system and the future power of Lightning as a settlement system. You might have 10,000 different banks, mints, community trusts, etc., but they will all be able to settle with each other over one open neutral network. He's talking here about, using different payment systems, Google Pay, Apple Pay, in place, especially in Tokyo. It's so fragmented that each company wants to expand its own little network, but they'll reduce the ability for other networks to be able to pay at your location. In the United States, you might go to a place like Walmart and you have to use Walmart Pay or whatever it is. You can't use Apple Pay. That's just one example of what's being talked about here, which results on a worse user experience, right? If I can't just tap my phone and use my Apple Pay or pay with what I want when I go to Walmart, it's a worse experience for me. And here's a interesting post by Mark Andreessen. AI query pipeline. User submits query. Preprocessor 1 removes misinformation. So this is kind of how like ChatGPT and all of these woke large language models are kind of working right now. And he's pointing out the ridiculousness and the absurdity of this. And here he goes. User submits query. So I ask a question. Then the preprocessor 1 removes misinformation. Preprocessor 2 removes hate speech. Preprocessor 3 removes climate denial. Preprocessor 4 removes non-far left political leaning. Preprocessor number 5 removes non-expert statements. Preprocessor number 6 removes anything that might make anyone uncomfortable. Preprocessor 7 removes anything not endorsed by the New York Times. And here we go. Preprocessor number 8 adds many references to race, gender, and sexuality. Query is processed, answer generated. And now they got a post-processor. Number 1 removes bad words. Number 2 removes bad thoughts. Number 3 removes non-far left political leaning. Number 4 removes anything not endorsed by the New York Times. Post-processor number 5 removes anything interesting. Number 6 adds weasel words. Number 7 adds moral preaching. Number 8 adds many references to race, gender, and sexuality. Answer is presented to user. With the assistance of industry coordination, global governance, and pan-jurisdiction regulation, this pipeline is now standard for all AI. Just like when we point out with Google search results, the same thing is being built into these large language models, and it's causing a lot of problems. And it's majorly biased and majorly problematic, right? So it's important that we get the freedom to use different large language models, and people wake up to this fact, just like we pointed out with Google biasing search results. Don't use these indoctrination propaganda tools. Find a different large language model that doesn't have all this propaganda, bias, and social engineering built into it. Next up, John W. Ratcliffe. Here is a photo of just some of the tax documents I have received in mail to date. It is literally hundreds of pages of documents in total, and they are still coming in. There are hundreds of more pages not reflected here because I received electronic versions of most of them, and I didn't need to print them out. I don't think people realize just how many tax documents are generated, even once you are retired primarily as a dividend investor. A number of the dividend stocks I own are considered partnerships. For each one owned in the previous year, it generates a unique tax document called a K1. Each K1 is many pages long. Moreover, these K1 documents continue to come in well after the April 15th tax deadline. In years past, I was still getting K1 documents in the mail all of the way into May. I have no idea what a K1 even is. I pay my accountant to deal with all of that. In the upper left-hand corner of the image is a 35-page booklet that came with one of the K1 statements attempting to explain how to deal with the forms. So here I am, retired, and other than Social Security and my wife's pension as a retired school teacher, we primarily just live on investment income and selling a portion of our Bitcoin stack each year. I'm currently spending over $6,000 a year just to have my taxes done, with an additional $2,340 a year for audit insurance. You might wonder, what do I need audit insurance for? Well, every year in retirement, I'm selling a portion of my Bitcoin holdings. I fear that having large crypto gains reported each year could make me a target for an audit. So the audit insurance is just for peace of mind should that ever happen. If I do get audited, then my audit insurance coverage means that my accounting firm will handle 100% of all communications with the IRS in resolving it. That's just grief I don't want to have to deal with. So all combined, I'm paying over $8,000 a year just for taxes and audit insurance. Frankly, I just consider this to be one of my expenses for taking Bitcoin profits. However, the Bitcoin sales are generating a relatively minor accounting burden compared to all of these tax documents I get from being an investor. I couldn't even begin to do my own taxes. It's absolutely insane. I don't think there is an answer to this. It just is what it is, and nothing is going to change about it. I just thought I would share here because I had no clue taxes were this complex in retirement. So it's literally impossible to understand all this stuff. I deal with this myself as an investor and a business owner. I just pray my accountant is doing everything right and my bookkeepers are doing things right, because this is more complicated than anything I've ever seen or witnessed in my life. It's almost like just another attack surface. If they want to go after you or get you for something, they put all these thousands of documents in front of you, and I sign off and read my tax return every year, but I can't even have a conversation with my accountant about it because it just doesn't even make sense. It's like he's speaking a different language. So I just give him everything, and you hope and pray that it's done. And the burden for all these things it grows and grows and grows, and there's more forms and more adjustments and more differing accounting loopholes, and it just got to this point where it's just so ridiculous. You pay a different rate depending on what your income is and all of this different stuff. I mean, I think they should just wipe the floor with all this and go to a 10% flat tax across the board. I think it would just make things exponentially easier and fair. Next up, Dennis Porter, 3 gold mines and 1 Bitcoin mine. I wonder which is better for the environment. So here you can see what a gold mine does to the earth and the damage and deforestation and all the things that occur, and you compare that with a Bitcoin mine, which is a couple shipping containers plugged into a wind power facility. Quite a difference. Paul Grewal.eth. Coinbase secures restricted dealer license in Canada, pushing expansion abroad amid SEC crackdown. Countries that are serious about regulation do more than offer performative statements about investor protection, especially for the underrepresented. They offer serious pathways to registration and serious oversight. Thank you, Canada. So here is Paul Grewal giving a shout out to Canada. I just wanted to show this, that even Canada is moving forward with a regulatory oversight and clear guidance for the industry. This is obviously a shot across the bow at the SEC by Paul. That being said, I also want to point out that we first saw some of the many benefits of Bitcoin and why Bitcoin is important with the way Canada acted in the authoritarian and very Orwellian treatment that we saw that they gave to the trucking protesters. That clown Trudeau, who's the president, basically wiped out their bank accounts and canceled them from the face of the earth, erasing them from existence. Essentially, they just confiscated extrajudiciously. And this is why it's so important that we rescind these unconstitutional laws and things that are in the United States with the FISA, is that depending on who's in power, they can change the meaning of words, they can change the definition of who people are. In Canada, they called the truckers terrorists and used that to essentially go around the court system, go around the laws, and basically just get all this extra power to erase their bank accounts, stop them from doing anything, right? People said that they went to log into their bank account and they said, you no longer exist. I mean, how absolutely insane is that? Here is a little video of what they did 2 years ago. Only 2 years ago in Canada, if you gathered with your family for New Year's, the COVID Gestapo broke into your house and arrested you and stole thousands of dollars in fines. So that clown Trudeau totally abused his power like some kind of authoritarian dictator. So these truckers were maybe blocking roads or doing certain things, and instead of using the actual police force to go and tow the vehicle or call a towing company to tow the car and charge them with a fine for blocking the traffic or whatever it is, right? There's laws and things that are already in place to deal with people who are disorderly in public. There's a police system and there's a court system to deal with that. Instead of actually doing that, he decided that he was going to say that these people, regular truckers, Canadian who are protesting, are now terrorists, and he abused his authority to now treat them as if they were actual terrorists and wipe them from existence in a way, right? Total crazy dictator behavior. And here's more of Trudeau's Canada, people having a private party at their own homes, and the COVID Gestapo. I don't know if this is true or not, but here he says, still can't believe they caught Kwon, founder of Terra Luna, with a treasure carrying 10,000 Bitcoin on it stuck up his rectum. This bear market was so crazy. Can't wait to see what the next bear market will bring. If this is actually real, it's unbelievable. He decided to use a treasure to stick it up his butt. I don't know if it's real or not, but kind of crazy. Somebody goes, my favorite comment, and to pick a treasure over a ledger. Ledger is slimmer. Gave me a good laugh. Musk defies Brazilian court. X Uncensored. Brazil's Attorney General Jorge Macias and X-Corp owner Elon Musk are at odds over social media regulation in Brazil. Following Musk's decision to lift restrictions imposed by the Brazilian Supreme Court on X, Macias has called for urgent regulations of social media networks, citing concerns over the influence of foreign billionaires on social media and the need to protect the rule of law. Musk, on the other hand, has criticized the court's decision, emphasizing principles over profit and challenging the order, which could potentially lead to the closing of the social media platform in Brazil. Interesting to see him taking a stand here. I know there was other issues in India where he had to comply in places where he didn't really want to, and sometimes you have to lose the battle to win the war, but hopefully if he can take it up in the legal system, he can win his court case. And finally, guys, I'm going to leave you guys with this one. Raul Paul, on days like today, just remember that crypto is still being adopted at twice the speed of the internet and should reach something like 1 billion users by the end of 2025. That's all I got for you guys today. Stay safe, stay blessed, never stop learning, and keep an open mind. Thanks for listening.